All right, guys, good afternoon. Welcome to my online class. Today, we're going to continue on chapter 18, process costing. Well, before we get started, let's have a quick review of what was discussed in the last class. Well, in the last class, I started to discuss process costing. First of all, you need to understand the primary differences between process costing and job order costing, uh, which, which was learned in chapter 17. Well, the biggest difference between process costing and job order costing is that how and when the costs are recorded in WIP inventory. Well, if you can recall that job order costing has only one WIP inventory count with a subsidiary ledger containing individual job costs records for each unique job, while in process costing has a separate WIP inventory count for each process or department, and a production cost report is completed for each process or each department, and costs are transferred at the end of each period. Well, the most important thing to understand process costing is to understand what is equivalent unit of production, or EUP. Well, as I said, in process costing, the total costs incurred during the periods in the department can be divided into two parts. The first part is pretty much straightforward for you. That is, the costs transferred to the next department at the end of the period, or the units completely finished in that department. Well, let's assume there are only two departments or two processes in the manufacturing process. Well, for the first department, again, the units can be divided into two parts. First, the units completely finished and transferred out to the next department. But the remaining part is incompleted parts left in the process line at the end of the accounting period. Well, for these parts, the costs remaining in the previous department or process should be calculated in terms of equivalent units of production. Well, the concept of equivalent units of production allows business to measure the direct material, direct labor, and manufacturing overheads incurred on a partially finished group of units during the period, and expresses in terms of fully complete units of output. Well, we used a fictitious company, Puzzle.me, as an example to illustrate what we learned in process costing. And also, in the last class, we discussed how to prepare a production cost report for the first department using the average weighted method. Well, let's assume there are two processes at Puzzle.me company. The first process is assembly. In this department, it applies glue to the cardboard and then presses a picture onto the cardboard. And in the second process, the cutting department cuts the cardboard into puzzle pieces and packages the puzzles in the box. Then the box is moved to finished goods inventory. Well, in the last class, I introduced 4 steps on how to prepare the production cost report in the first department. The first step is to summarize the flow of physical units. Well, we learned 2 concepts: to account for units and accounted for units. To account for units, again, includes the amount in process at the beginning of the period plus the amount started or added during the period. And for accounted for, it shows what happened to the amounts to account for. They are either still in process or completed and transferred out. Well, the most important thing is that you should always remember that to account for and accounted for must be equal. In any cases, must be equal. So, understanding this concept helps to calculate the physical units in the production process. You know how many units are at the beginning of the period. How much units are added in the period? How many are left in process and how many are completed and transferred out? Well, this is the first step to complete the production cost report. Second step was to compute the outputs in terms of equivalent units of production. Well, we assume that for the first department, the direct materials are added for the direct materials. It is added at the beginning of the period. And for the conversion cost, they were added evenly throughout the process. So in the second step, we divide the added cost into two parts to account for direct materials, which were added at the beginning of the period, and conversion costs, which were added evenly throughout the process. Well, since direct materials were added at the beginning of the process, we could consider it as 100% completed. And for the conversion costs, which were evenly added throughout the process, we assume that this part of cost could be 25% to the equivalent units of production. So for the completed units, that's straightforward. We times 100%. And for in-process units, which were not finished, we times 25%. So the blue part shows how we do the second step. Step 3. Step 3 and step 4 are about the costs. Step 3 is to compute the cost per equivalent unit of production using the weighted average method. We use the total cost to account for divided by equivalent units of production for either direct material or conversion costs. So in the third step, we know the unit cost for either direct materials or conversion costs, which were $2.80 and $1.60 respectively. Well, and in the last step, step 4, we assign the cost to units completed and units in process. Well, since we have known the physical units, since we have known the EPUs in step 2 and know the unit cost per EPU in the third step, we can multiply the results calculated in step 2 and step 3 to get the total cost for either direct material and conversion costs. So this is a quick summary of what was discussed in the last class, how to prepare the production costs reports for the first process. Well, today we will continue on a very, very similar thing. That is how to prepare the production cost reports for the subsequent departments using weighted average method. Well, you have now accounted for all units and costs for the first department, which is assembly department. So it's time to complete the same process for the second department or the cutting department in our fictitious company. The cutting department receives the puzzle boards from assembly department and then cuts the boards into puzzle pieces before inserting the pieces into the box at the end of the process. So operations for this department include 3 inputs. The first inputs are, of course, from the first department. Well, when the units are completed, fully completed in the first department, these parts should be transferred out of the first department and transferred into the subsequent cutting department. So this is the first input of cost. The first input. Well, let's see. The second input. Similarly, conversion costs also incurred at the cutting department. And also, similarly, the conversion costs are added evenly throughout the process. In addition to conversion cost, of course, we have direct materials incurred in cutting department. But let's see. Here is a tiny difference. For cutting departments, the direct materials are added at the end. At the end of the process. If you can remember, if you can recall that in the first department, direct materials are added at the beginning of the process. Meanwhile, for the second department, direct materials are added at the end of the process. Well, here is a very tiny but important difference. So let's see. Well, let's analyze these 3 parts one by one. Please keep in mind that direct materials in the cutting department refers to the boxes added in that department and not to the materials added in the assembly department. The costs of the materials from the assembly department that are transferred into the cutting department are called transferred in cost. And likewise, conversion cost in the cutting department refers to the direct labors and manufacturing overheads incurred only in cutting department. The conversion costs incurred in the assembly department are not transferred in costs for the cutting department. The data show that this company's cutting department started the July period with 5,000 puzzle boards partially completed through work done in cutting department in June. During July, the cutting department started work on 40,000 additional puzzle boards that were received from assembly departments. So what we need to do here is to calculate how much is the question mark. Similarly, we use the sum of these two numbers minus 38,000. We get 7,000. So similarly, we do the step 1 to summarize the flow of physical cost. Well, here I need to correct one thing from the slide. Well, in the previous version, there are some mistakes in this formula, and I corrected this part right in this morning. Well, if you download the slide from Canvas, please correct it. This is the correct version. So let's see for the first department. For the first step to summarize the physical units. So this 7,000 is the number that I calculated just now. Well, similarly, the second step is to compute output in terms of equivalent units of production. The cutting department would start with the units transferred in from assembly department. The cutting department adds direct materials at the end of the period, and conversion costs are incurred evenly throughout the process. So we must compute equivalent units of production separately from direct materials and conversion cost. Additionally, the units have costs that were transferred in with that must be accounted for. So if we jump a little bit ahead, you can see here is the difference. Well, for the production cost reports in the first department, you do not see this part. But here it is the production cost report for the subsequent department. You would expect to see the transferred in costs. This part is transferred out of the first department. So for the subsequent department's production cost report, there are 3 parts to account for in terms of equivalent units of production. So let's go back. And let's see these three parts one by one. For the transferred in cost, and again, the cutting department is the second department in the process system. That's why it receives the units transferred out of the first department. And, well, these units are transferred in units. The equivalent units of production for transferred in units are always 100%. Always 100%. So you may ask why? Because these units came in with costs assigned to them from the previous department, which was calculated on the production cost report for the assembly department. If they were not 100 complete with respect to the previous process, then they would not have been transferred in. They would still be in process in the previous department. Therefore, any costs associated with the work done in the first department stay with them at 100% EUP. Okay, this is transferred in cost. Again, you should remember that it is always 100% in terms of equivalent units of production. So next, let's see. It is direct materials. Well, for completed units, we times 100%, no problem, because they are fully completed. But in terms of in-process units, we times 0. So think of it. Why we times only 0 in the subsequent department? Well, as I said, we times 0 because, as I said, direct materials were added at the end of the period. That's the reason why we times 0. Okay, this is direct materials. And the last part, conversion cost. Well, similarly, conversion costs are complete for, well, in this case, 38,000 puzzles completed and transferred out to finished goods inventory, but only 30% of the conversion cost has been done on the 7,000 puzzle boards in ending WIP inventories. So we assume 30% of the conversion cost has been added to the incompleted units. That's why we times 30% here in terms of calculation of EUP. So this is the second step. Second step, same thing, to compute outputs in terms of EUP. Okay, if you can recall that the third step, step 3, is to compute the cost per equivalent unit of production. Well, since the cutting department has 3 inputs and therefore must make 3 calculations for cost per EUP. Well, as I said, the first input source is transferred in costs. So we use total transferred in cost divided by equivalent units of production for transferred in. And similarly, we use total direct material cost divided by EUP for direct materials. And total conversion cost divided by EUP for conversion costs. So in terms of transferred in, direct materials, and conversion costs, the total costs are listed here. The total cost for each input categories. Okay, this is the calculation. So look at this part. This part. The unit cost for EUP in terms of transferred in cost is $4.40. Well, if you have a good memory, you may find that this number is consistent with the unit cost with the unit cost calculated from the previous department. That's this slide. Well, this is the unit cost calculated in the first department. Well, in the first department, the unit cost for direct material is $2.80. For conversion cost, the unit cost is $1.60. Plus them together, we get $4.40, which is right the number listed here. Which is right the number listed here. Because this part is transferred in cost, which is the transferred out of the first department. It should be consistent. Well, for the other two parts, for the other two sources, direct materials and conversion costs are newly added in the subsequent department or the second department. Well, so for the direct materials, we get 5 cents. The unit cost to be 5 cents per EUP and 40 cents per EUP for conversion cost. This is step 3. So the part marked in blue is what you can respect in step 3 to prepare the production cost report. Well, step 4, to assign costs to units completed and units in process. Very similar process. So here, let's assume the last step on the production cost report is to determine how the total costs accounted for by the cutting department should be assigned to the following. First, 38,000 completed puzzles that have been transferred out to finished goods inventory, and 7,000 partially completed puzzle boards remaining in the cutting department's ending WIP inventory. Well, this is accomplished by multiplying the cost per EUP times the EUP calculated in step 2. To assign the cost of the 3 inputs into 2 outputs, this step must be completed 6 times. So for the first 3, we have to calculate the completed units in transferred in costs, completed units in transferred in cost, completed units in terms of direct materials, and completed units in terms of conversion costs. And the last 3 steps are in process units in terms of transferred in process units in terms of direct materials and for conversion costs. So now the production cost report for the cutting department is completed. Okay, next, let's see how to prepare the journal entries for a process costing system. As costs flow through the process costing system, we go through a 4-step process to accumulate, assign, allocate, and adjust. This is the same process that was illustrated in the previous chapter for job order costing. But remember, the primary differences between the two costing systems are how the costs are accumulated and when the costs are assigned. Well, in the process costing system, the costs are accumulated in the following accounts: raw material inventory, the various WIP inventory accounts, and the manufacturing overhead at the end of the month. When the production cost reports are prepared, the costs are assigned to units. The costs assigned to the units completed in each department are transferred from one WIP inventory account to the next and eventually finished goods inventory and COGS accounts. So, following is the description for the journal entries associated with this company in this accounting period. Well, the first journal entry, let's see. During July, the company purchases materials on accounts for $175,000. Well, the journal entries for process costing are similar to those for job order costing. When inventory is purchased on account, the raw material inventory account is a debit and accounts payable is a credit, both for same amount of money. Well, transaction 2, raw materials used in production. During July, direct materials were assigned into 2 production departments. For assembly department, $130,200 are assigned, and for the cutting department, $19,000 were assigned. In addition, it has $2,000 in indirect materials were accumulated in manufacturing overhead accounts. So we sum up these 3 numbers to credit raw materials inventories and debit each account, WIP inventory account for both assembly and the cutting department for direct materials, and the indirect materials goes to manufacturing overhead account, a debit. Well, similarly, let's see how to prepare journal entries for labor costs incurred. Well, during the month, Potmi assigns $22,090 in direct material costs to assembly department and $3,840 in direct material costs to the cutting department. In addition, it has $1,500 in indirect labor costs. So, similarly, we sum up these 3 numbers to credit wages payable and debit each one to separate accounts. For direct labors, we debit WIP inventory to each department, and for the indirect labor costs, we debit manufacturing overhead. Additional manufacturing overhead is incurred for depreciation and rent and utilities. Depreciation is recorded with a debit to manufacturing overhead and the credit to accumulated depreciation. Well, for rented utilities, it is recorded with a debit to manufacturing overhead and a credit to cash. And next is allocation of manufacturing overheads. Let's assume Puzzle.me uses a predetermined overhead allocation rate to allocate indirect costs to departments. $42,000 to the assembly department and $11,000 to the cutting department. So we debit each WIP inventory account for each department and credit manufacturing overhead. Well, this is the transfer from the first department, assembly department, to the second department, cutting department. So let's see, what do we do? The transaction is that at the end of July, when the production cost report for the assembly department is prepared, Puzzle.me assigns 176,000 to the 40,000 units transferred from assembly department to cutting department. So if you can remember, as I said, in process costing, each department or each process has its own WIP inventory account. So the transfer should be done within WIP inventory account. From different departments. For the transferred out department, we credit, and for the transferred in department, we debit, because the WIP inventory account is a assets account. The increase of assets accounts should be debited, while the decrease of assets accounts should be credited for the same amount of money. Well, and similarly, let's see how to transfer the fully completed units from cutting department to finished goods inventory account. Well, it's very similar to transaction 6. It's is just a transfer from two different assets accounts. And the increase of assets accounts is to debit it, while the decrease of assets account is to credit it. So to transfer out of the cutting department, we credit WIP inventory in cutting department and debit finished goods inventory account for same amount of money. Okay, next, let's assume during July, Puzzle Me sells 35,000 puzzles. The total production cost of manufacturing a puzzle is $5.30. The cost. So the unit cost times the unit cost times the number of physical units sold is COGS, cost of goods sold. Well, in this case, the COGS is $185,500. And the puzzles are sold on account. So for the sales on account, we need to debit accounts receivables and credit sales revenues. Well, as you learned in financial accounting class, for the sales transactions, you need to do two journal entries. One is to record the revenues, and the other one is to record the cost of goods sold. So for the COGS, we do this journal entry, and for the sales, we do the first one. Well, I said that manufacturing overhead account is a temporary account, which means that this account, the ending balance of this account should be 0. So at the end of the accounting period, we have to adjust manufacturing overhead to make sure that the ending balance is 0. The actual manufacturing overhead costs incurred are 50,500. The amount of manufacturing overhead allocated to the two departments is 53,000. The T account in this slide shows that the amount of manufacturing overhead allocated is $500 more than the actual cost incurred. This means the overhead is over-allocated. So, in case of over-allocation, the adjusting entries for over-allocation or under-allocation is usually prepared at the end of the year. We are showing it here that at the end of the month, so we can illustrate all journal entries for a process costing system. This means manufacturing overhead is overallocated by $500, requiring an adjustment at the end of the period. So, to adjust, we have to either debit or credit according to the nature of the allocation, over allocation or under allocation. We need to make manufacturing overhead account to be 0, and this part of money needs to go to COGS account. So this slide illustrates the K accounts after posting. In process costing system, primarily 4 accounts are used. Okay, lastly, let's see how to use a production cost report to make decisions. Well, so far in this chapter, you have learned how to prepare the production cost report. Now, let's consider how managers use the production cost reports to make decisions for the companies. Well, the managers use the production cost reports. Primarily, they have 5 goals. The first one is to control the costs. Puzzle uses product cost data to look for ways to reduce cost. A manager may decide that the company needs to change suppliers to reduce the cost of its direct materials. Or a manager may change a component in the production process to reduce direct material cost. To reduce labor costs, a manager may need employees with different skill levels paid at different hourly rates. Perhaps more skilled employees would require higher pay rates, but be more efficient. The increase in cost per labor hour may be more than offset by the increased productivity of workers. Managers may also evaluate the efficiency of the production equipment. Newer or more efficient equipment may reduce manufacturing overhead costs. And the second goal is to evaluate performance. Managers are often rewarded based on how well they meet the budget. Puzzle the company compares the actual direct materials and conversion costs with expected amounts. If actual costs are too high, the managers look for ways to cut them. If the actual costs are less than expected, the managers may receive a bonus. Well, the third goal is to set the selling price. The company must set its sales price high enough to cover the manufacturing cost of each puzzle, plus selling and administrative costs. The production cost report for cutting department shows the total production cost of manufacturing a puzzle is $5.30. Well, obviously, the puzzle must be priced more than this for the company to be profitable. The fourth goal is to identify the most profitable products. Sales price and cost data can help the managers figure out what products are more profitable. They can promote these products to help to increase the profits. Well, lastly, the last goal is to prepare the financial statements. So finally, the production cost report is the financial reporting. It provides inventory data for the balance sheet and COGS data for the income statement. So in the appendix of this textbook, you would expect to learn how to prepare the production cost reports using the first in, first out method. But it's out of the goal of this course. So for anyone who are interested, you can read the appendix to learn how to prepare the production cost reports using FIFO method. All right, that's all of this chapter as well as today's class. So if you have any more questions, please let me know or send me an email after the class. Thanks for your attendance. I will see you on next Monday. Bye-bye.